This visual 7-step guide is a must if you want to retire earlier, retire wealthier, and retire happier. You must first know how much you can actually afford to invest after taxes, after expenses, and after real life occurrences like job changes, pay increases, marriage, having kids, buying a home, kids move out, injuries, setbacks, and so much more. It happened to our own selves and the thousands of people that we have spoken to. Most people don't fully know or understand this number, and it is the number that determines everything on your financial freedom journey. As an educator and wellness coach, helping people achieve their own alignment and inner peace is absolutely incredible.
Since 2015, I have been in the investing and tax industry myself. As a fiduciary wealth advisor, I have helped people retire earlier and happier, most importantly, with that less stress and greater peace and greater alignment. We're wanting to make this powerful educational video with several visuals throughout with the step-by-step guidance. So whether you're a novice, you have an expert on here, this video will be insightful for everyone on here as well. So you could be in your 20s. Your 30s, your 40s, your 50s. Now, of course, the younger you are to best apply these, the greater impact it can have, but it could still be used for everyone who is out there. So before you choose that Roth IRA, 401k, or that employer plan, before you look at that non-qualified account or how to invest the money or where to put that money at, you need clarity, you need understanding, and you need guidance, especially with taxes as well. Otherwise, you're just guessing and you're hoping for the best. That can cost you thousands of dollars. That can cost you years of your life as well. So if you can learn something on here that can save you thousands of dollars, that can get you years of your life back, why not at least learn to see how this works on here so you can truly know how your money flows for something powerful to truly happen. That way you too can hopefully retire earlier, wealthier, and happier.
Yeah, so this is more than math and just numbers. Financial clarity affects your emotional health, your nervous system, your relationships, and the way that you move through your life. When money becomes clear, life becomes lighter.
Now, we're going to start off with here step number 1. Find your gross annual income. Now, again, step number 1 here, the gross income, it's your starting point. So many people don't fully understand that. We want to look at the gross before anything is taken out. No taxes, no expenses, no healthcare, just the gross starting number. So like your salary, your income, your total pay, if you have bonuses or you have overtime or something similar. This is the before anything happens or anything is taken out number. When you know this number, you establish that foundation for every decision that is to come to follow.
Now, if you're unsure, that's totally okay. And you can look at your employer online HR portal. You can ask your HR. You can even look at your pay statement for that gross number or similar. Now, if you have overtime, then you can do a best honest guess as to how many hours at least and add that to your pay. Similar to bonuses, take an honest guess at the low amount that it would be. Again, you can always make those adjustments.
All right, so now let's go to step number 2 here. So on step 2, we're going to calculate your after-tax income. So it's time for some tax talk on here. Now, we apply taxes to take out minus the money you get to keep. Now, I'm going to mention here in a few moments on here a free tool that you can easily use online to help out with all this. So give me about 2 to 3 minutes. I'm going to give you that tool to help. But I want to give you the education first before you can utilize this tool as well. Now, the IRS, it doesn't tax your entire full salary. It taxes your taxable income. So first, we want to subtract what's called the standard deduction. We have a separate video explaining that entire amount. If you're not sure of standard deduction, you can always watch that at a later point in time. But the standard deduction. Now, if you itemize your taxes or you do something else, then this will not directly apply to you. But for this video, we're going to focus on the standard deduction in this case. Now, you'll also use the current year's federal income tax chart we are in for your tax brackets as well. Now, depending on your own state and city, additional taxes can apply, so be aware of your own state and your city. But again, for this video, looking at the federal income side, but the foundation still applies. Also want to find out on here is if you're single status, if you're married filing jointly, if you're head of household, there are different standard deductions and different brackets for that as well that you want to be aware of. Now, for now, we're not going to factor in any kind of 401k, employer plans, IRAs, or Roth IRAs. Don't do any of that. We're simply going to look at the total income you get minus just taxes for now.
So, David, what is a good free website tool that people can use for this to help? As this is where most people, they lose that clarity because taxes do feel overwhelming. I know once you see them visually, then awareness occurs. So, David, where can they go as one example?
Yeah, so one good tax resource on here that someone can use for this step as an example is a company called Smart Asset. And you can search for a Smart Asset tax calculator, either smartasset.com. Now, I myself, of course, have access to more advanced tools, more advanced tax planning software. However, this is a great free resource you can use. There might be others out there as well, but very visual, very easy to understand that you can plug these numbers in, including your own state and your own city. And remember, too, is if you do have a child or children and they apply for their deduction, you want to include that here as well, and that tool can also do that. And again, total honesty, I don't get paid by Smart Asset, no disclosure, no affiliation. It's just a great free tool that's visually used for people.
Okay, so remember that this can change throughout life for a variety of reasons, like a new job, new home, marriage, kids, but the foundation does stay the same. So step 3 is deduct your core monthly needed cost. Okay, in this step, we now need to deduct your core monthly need living costs, like housing, which can include rent, mortgage, utilities, your water, gas, electricity, and more, healthcare, medical, dental, vision, transportation, car, gas, or electric vehicle costs, mandatory insurance like home care, etc., food and groceries, because we all need that to live. Estimate each month the average cost. Loans like a car loan or any other loans, and anything else similar. So these are the pillars to your daily life.
Now, I know these are usually all items we're fully aware of, and we know they have to occur, but we have to actually identify them. We have to put them on pen and paper, pencil paper, on a computer to visually see what they are, so we become aware of it to truly know those impacts. Now, we will eventually get to what's called discretionary or additional cost or additional expenses later on here as well in additional steps, but you now have your new monthly number you've just identified, and that completes step number 3. All right, so let's move on now to step number 4 here. So on step number 4, it's your spendable money and the emergency savings must. Now, you want to take your number from step 2. So find the number at step 2 we just did, and you want to then minus that number from step 3 that we just did. So step 2, take a number from step 3 and minus that. This is the real cost of simply existing, of your baseline, of your foundation and monthly must.
Wow. So now that we have this number, we can then determine how much we need in that emergency savings. You'll need to take this number in step 4 that we just did, multiply it at least by 3, if not 6. This money will go into a bank savings or checking account and not be invested, as it's a must for living expenses.
Yeah, as Ashley was saying just now on here, we all know life happens. There's unknowns. It just happens. Injuries, you could get sickness, something happens to your house or your car, right? So a savings is a must that you must occur. When your emergency fund is aligned with your life, your decisions become clearer and more intention. Again, this number can change throughout life as well, but this foundational baseline and formula will stay as is.
Yeah, so now we go to step 5. Identify your discretionary lifestyle spending. So this next step isn't about judgment, it's about awareness and identification. Awareness creates freedom and leads to that intentional planning. So we're going to list out the extra spending you do each month, like the vacations, the restaurants, the entertainment, kids' sports, subscriptions, gym, yoga, hobbies, haircuts, makeup, clothes, shoes, and so much more. You get the picture. Again, this is not bad. No. It's not wrong, but they must be intentional and brought to light.
Yeah, I mean, ourselves here as parents, we have kids in a house, we have dogs ourselves as well. Yeah. So there's lots of different costs that have happened. Before kids, there was a cost. With kids, with the house, so things change throughout life. But again, the foundational formula we're showing you in these steps will stay the same. Now, let's also not forget about credit cards, right? Yeah. Credit card money, it's not free money that's out there, and there's a lot of debt issues that occur on there. But this is certainly a massive issue. And at one point in our own lives even, we had credit card issues, but we were able to overcome that and solve that as well using these steps and other features because we're mindfulness.
Right.
Now, you want to go ahead and do is list out all the credit cards you have. Go ahead and put the current balance you have on there, the interest rate of each one on there, and anything additional applies to that credit card. Please also list the minimum monthly payment needed on each of these cards. Now, of course, we want to pay far more than the minimum, but we have to know the minimum at least that is on here. All right, so now we're going to go ahead on to step number 6. So step 6 now, we're going to calculate your actual free cash flow for actual investing. Now, to find your actual cash flow available to invest number, we're going to take the number from step 3. We're going to minus your number in step 4. And then we're going to minus your number in step 5. Again, these numbers can always change throughout life, but this is your present state and where you're currently at now. You now have your remaining cash that you have allowed yourself or you have chosen for your own self to have remaining that we can eventually look at investing in different account types like that 401k or that TSP or 403b or employer plans. We can look at an IRA or a Roth IRA. We can look at that brokerage account or that non-qualified, non-retirement account and so much more now.
So this is your first true moment of true clarity. I'm sure this has just stirred up like a whole lot of emotions mixed up and just awakened a part of you in an onset of clarity. This is a no judgment moment, but a moment of realization.
Yeah, now Ari, next step is step number 7. So step number 7 on here is where to invest and what tax account types. This is what everyone always wants to know.
Yes.
Now, I truly do mean this. You have your own number now. There's no shame. There's no guilt. There's no right or wrong. You've taken the courage to have the education, to have the guidance, to have the plan. And we truly do commend you for that because that will help you with that retiring earlier, wealthier, and or happier, that less stress and that less fear and that more peace on there. But let's go and talk about, everyone wants to know, where do I invest, right?
Yeah,
what accounts do I put it in? How does it all work? The different tax impacts that occur on there. Taxes on the 401ks, money coming in, money coming out, and withdrawals on there, long-term capital gains, short-term capital gains, just overall money, and the 59.5 age rule, restrictions, so much more. How to reduce taxes, protect assets, your estate, legacy, everything everyone wants to know on there.
Yeah, we strategically and intentionally made a part 2 of this video. Combining both in one video could be overwhelming, cause confusion, which we never want. So we do this consciously and intentionally.
Yeah, I mean, for true alignment for us and to truly guide people that is out there, we're making a second video, right? Part 2 of this on here, because without this first video, without a foundational understanding, the second video wouldn't matter at all. We'd still be blindly guessing, have some confusion on there. So we're going to go ahead, the second video here coming out in another week here or so, directly after this one. You can always watch here as well. That way you can find out how to save thousands of dollars. You can find out how to save years of your life in retirement.
That's important.
You can find out what true wealth really is for your own self and not of other people. That way we're not guessing. So this is your foundation. This is your real number you're presently at.
Yes, and part 2 will be able to give you that direction, where to place your money with intention, clarity, and long-term peace.
Yeah, because we want you to have that less stress, less fear, more alignment, more inner peace, more love and light from within you as well, without so much guessing and confusion and distractions and noise that's out there.
And we'll see you in part 2, and please feel free to comment and share this video.
All right, thank you so much for being here today.